Harbor Group is a globally integrated platform that owns and manages 250 assets worldwide, including 45,000 multifamily units and 4.8 million square feet of commercial real estate and various preferred equity and mezzanine and other loan positions. The aggregate gross asset value is in excess of $12.5 billion, and we are flattered to be privileged to have you, Jordan, with us today to enlighten us, our clients, our referral sources, and friends. So let's get started.
I'll just tell you a really funny story. We closed on the deal in January of 2010. We bought it for $107 million. Soon after, I was asked to participate on a panel in New York that the New York Post, Lois Weiss, is a reporter with the New York Post, was hosting. I sat on the panel with a lot of big name real estate people. And frankly, once we kind of got off the stage, a lot of them came over to me and they said, Slone, what are you thinking? Don't you know that nobody makes money on real estate in Lower Manhattan? And of course, we got the last laugh. 26 months later, we sold 4 New York Plaza. Again, I said we bought it for $107 million. We sold it for $270 million 26 months later. So it's really a deal that I will never forget. Yeah. Well, Mark, I will say, you in the previous question, you asked me about our secret sauce or our special sauce. The diversity of our equity base, that really would be our special sauce, our secret sauce, whatever you want to call it. When we started, like a lot of people, we started out with individual high net worth investors. And then as we grew, we started attracting the attention of institutional investors, both domestic as well as foreign institutional investors. And, we had an opportunity. I remember, I guess this was in the late 90s, maybe into the early 2000s. Mark, you may remember GE Capital. They were a big real estate player, one of the biggest real estate players. And we used to borrow from GE. And one day they came to us and they said, you know what? We're willing to provide for you all the equity that you need. You don't need your high net worth investors anymore. And I went to my partners and I said, you know what? They make it sound so good, but our investors have been with us for, at that time, maybe it was 15 or 20 years. I said, we're not gonna just leave them. They've stuck with us through thick and thin. And even today, as you mentioned, we're nearly a $13 billion company. We have investors of all sizes, Forbes 400 family offices, money management firms, insurance companies, large foundations. We still, though, kept to our individual high net worth investors. Along with them, we've been let them participate through a fund that we do. And so it's really through thick and thin, we have an equity bucket that we can tap into. And quite frankly, and I'm proud to say that during good times and bad times, really all of our investors, the institutional ones as well as the individual ones, have stuck with us. Absolutely. So, I mentioned a minute ago that as we started attracting institutional capital, it began to squeeze out our individual investors. So we decided about, I guess it's been now about 15 years, that we decided to create a fund for high net worth investors to participate along with our institutional investors. So we do a fund that the investment period is 1 year, and that fund takes a small piece of every deal that we do. On average, it's probably somewhere between 15 and 20%. So if it's a deal we're investing, well, you mentioned early, we did at the beginning of this year, we did a $2 billion transaction We raised, we put about $580 million into that transaction, which was one of the largest apartment portfolios that's ever been done. But our fund got to participate along with our institutional investors, which included a foreign, very large insurance company, a pension fund, a couple of Forbes 400 family offices, but our individual investors, many of them, as you said, that have been with us for many, many years, got to participate in that deal.
It's very exciting. It's amazing the access you give to even those smaller investors to participate in such investment grade deals. And kudos to you for that.
So important. And that is, we had to address the safety of our tenants, our residents, and our employees. And that was really, first and foremost in our minds before we did anything else. One of the things that, we did is we immediately, we examined every area of our company, both corporately and at our properties. And we put a freeze on hiring. We also look to reduce expenses wherever we can. In fact, there was some of our staff that we decided that we would without. And when it came to our properties, we stopped all capital improvement spending, and we really looked at cash positions. We did sensitivity studies for our properties to see if we stressed them, if people didn't pay their rent, where would that leave us in cash position wise. So it was really something, again, not having a lot of experience in pandemics, but having been, after 35 years, having been through several cycles, I knew that it was something that we had to address rather quickly. So I think in the short term, there will be an impact. I think there's already been, you've probably read, it's been in the news, some firms are looking at scaling back. But in the long run, maybe we'll have less office buildings developed, maybe less inventory. That's okay with me, as a person who buys existing stock and owns existing stock. But at the end of the day, I do not think that this is going to change the office building business, like, let's say, what Amazon has done to the retail business. It's to take action swiftly. Don't get stuck in the mud. Don't wait around to see what it looks like after the bomb has been dropped. I mean, we move very, very quickly. As soon as we see that there's something extraordinary about to happen, we take actions. We can always put back what we took away, or we can always pivot back to what we were doing. But that's really the lesson that I would say that I've learned over 35 years of being through many cycles, and a couple of severe ones. First of all, the late 1980s, 2008, 2009, and what we're going through today is move quickly to take action. And by the way, it's not always doing something defensive. It could be to do something offensive as well. Times like this create great opportunities.